More important is the legislation of the tax law. It's the paragraph 3.39, very difficult and very long, but all in all, and very bureaucratic, but all in all, the employer has the possibility to contribute to employee financial participation scheme an amount of 360 euros per year and employee, and this amount is free of taxes and of social contributions. And on the other hand, also the employee has the possibility, in the way of deferred compensation, for example, to buy employee shares for an amount of 360 euros per year. But that amount is tax-free, but it is not free of social contributions, and that's an important point. That has something to do with the system, the whole system of social security in Germany. I come to that point later. And that amounts can be invested into the own company, or they can be invested into funds, so-called employee participation funds, but that's only hypothetical, because no such fund does actually exist because of bureaucratic regulations and other problems. That's not very much, but when we have a look at a typical employee participation scheme in a small or in a medium-sized company in Germany, but also in big corporations, then we can see this example. When we have a contribution of employees per year of about 400 euro, and we have a contribution of an employer per year of 360 euro, then we have a total per year of 760 euro per year and employee. After 6 years, that's a normal period of investment, we have 4,560 euros plus interest, let's say 5%, 728 euros, and the saving subsidy out of the tax formation law, or out of the asset formation law, 480 euro, and in total about 700 euros, 768 euros. That means an average return for employees of 25% per year. That's very much, and it has to do with the contribution of the employer. And another example, when you have a medium-sized company of about 200 employees, and you have a participation rate of 50% of your employees, then you can create capital in 6 years of about 570,000 euros. That's a typical EFP scheme in Germany. Both parties will have advantages. That's clear. More equity on the one side, and a good return, a super return on the other side. But to understand why we do not have so much people or so much employees who participate at the equity or the capital at their company, we have to make a short look on the situation of the social security system as a whole in Germany. Let's have first a look on an income scheme of an employee. When we have an employee's gross income of about 3,000 euros per month. Employees' gross income, 3,000 euro per month. That's an average of income in Germany for not so qualified workers or employees. Then that income is reduced by taxes, okay, 25%, and by contributions to the social security system, 20%. That means the net income of this employee is only 1,650 euros. On the other side, the employer's cost for that to realize such a net income for his employee are 3,600 euro, because he also has to contribute for this employee 20% of his of the employee's gross income to the social security system. That looks like that. The statutory social insurance system has 3 columns. We have first the pension insurance. Second column is the health and long-term care insurance, and third column is the unemployment insurance. And for example, pension insurance costs 19.9% of the gross employee's income. And 50% is paid by the employer, another 50% is paid by the employee. And healthcare and about 17%, and unemployment insurance about 2.8%. And in addition, we have an established system of corporate company saving plans. Company saving plans, for example, company old age pension schemes, are promoted by fiscal incentives, and there we have tax-free and contribution-free amount of about 2,640 euros per year. And in addition, an amount with 20% taxes of 1,800 euros per year. That means we have about 4,500 euros per year tax exemptions for every employee in Germany. And then we, as an association for employee financial participation, we come to our politicians and say we need a tax exemption of, let's say, 2,000 or 3,000 euros per year. That's not possible. That means the social security system and the company saving plans absorb absorbs the money which can also be used, or which could be used for more employee financial participation in Germany. Yeah, and therefore we have here a study of the German Employment Agency from September 2006. When we look at share ownership schemes or profit sharing schemes, therefore we only have in small and medium-sized corporations only 2 to 4% of the corporations or of the companies who have established such schemes. In companies with more than 500 employees, it's about 7% profit sharing. We have 1/3 of the bigger corporations or the bigger companies who have realized such schemes. And this is these data are confirmed by a new study of the Helmut Schmidt University in Hamburg, and there you can see that on the right side, companies with more than 500 employees, we have 6.3% who have realized employee financial participation schemes. Yeah, that's the situation. All actors in that on the topic agree that employee participation, financial participation is a good thing. We have a better liquidity position of the companies. We have more flexibility in personnel costs. We saw it in the crisis of the last 2 years. We have an increase of equity, and we have intelligent human resource management systems. Employee asset formation is an important point, social security and retirement schemes, and more employee motivation and engagement, and a participative cooperative culture in general. These topics can be realized, or these objectives can be realized with employee participation, and we the AGP, my association, we made a study 3 years ago with A.T. Kearney, and what we found in companies with employee financial participation is an improved identification with the company of is more motivation, higher productivity, better results, and so on. That means positive effects of such schemes. On the other side, when you think at what we talked about at the beginning of my presentation, it is not so easy to realize employee financial participation. Employee participation, as we understand it in Germany, it has to do with the corporate culture, with mutual trust between management and staff, with confidence in the economic prosperity of the enterprise and in corporate governance, with open information and communication, transparency concerning economic development and objectives of the company, and it's important to involve the relevant people, the works councils and the employee representatives in the development and implementation of such schemes. So when we try to ask the question, why do we not find more financial participation in Germany, we can summarize like that. We do not have enough incentives. We have the competition of the social security system. We have a distance of trade unions and employers associations in that case. We have the special situation in Germany that 90% of the companies are family-owned companies with a special legal structure, and there we have prejudices of entrepreneurs and the family owners, especially with regard to an attenuation of property rights and decision rights. That's the situation in Germany. Thank you very much for your attention. If you need more information, please contact me. Thank you.
So it has been a pleasure to hear from Heinrich this presentation, which introduced the fundamental topic about small and medium enterprises. Following this area, I would like to welcome Marion Westerhoff from Netherlands Participatie Instituut, who will make a presentation that you will not find in your documents, because this is a last-minute presentation in the meaning that it has been finished and presented to very high target people.